Now let's get on to the phone lines because we've been joined by Professor Godfred Bokpin. You know, there's a lot of conversation about the Ghana city. We're told that, yes, we're doing very well. The economy is doing very well. The outlook looks very good. Well, let's have him share his thoughts on these with us. Professor Bokpin, good morning, and thank you very much for joining us.
Yes, good morning, Winston, and everyone in the studio and service business.
Great. Prof, the governor is in the news. He's been talking about how the economy is resilient. He's talked about how the outlook looks bright for us as a people. But there are many who are concerned because in the current quarter, the challenge has been the worst performance of the Ghana city this year. Even though year to date we say we have done very well, when you take the third quarter, we are not doing very well. What do you say is the country's economic outlook from your point of view?
Okay, thank you very much. Great one. I think you said something before you asked the CD about the target we set for GRA.
Yes,
I
yes,
agree
yes.
with you 100%. It makes no sense that one day you'll have that conversation.
Sure, Prof.
Okay, so if you look at the way the CD performed this year, the CD jumped the gun. The CD went far ahead of the recovery. So, and that is why we're concerned about the aggressive pace of the strengthening or the appreciation. So once the CD went ahead of the gun, there has to be some correction, and that is normal. I think that we should not be in a panic situation. We should not. The situation is not out of control. If you look at first quarter growth, and you look at second quarter growth, of course, quarter on quarter, second quarter was slightly lower compared to first quarter, but the growth is broadening. So, and then again, if you can even see that gold, its contribution to GDP dipped slightly, but there was stronger growth coming from ICT, agriculture in terms of crops and all of that. So we are beginning to see a certain broadening of the growth, which is very good.
Okay.
But that growth again is not driving what we call structural transformation. Of course, that takes a while. So the growth is still coming from a bit of low productivity. Of course, we can talk ICT, which was the biggest driver of the second quarter growth. But then when you talk about agriculture and the growth that is coming from crops, it's still low productivity. So we can't use that to say that there's transformation. And economic transformation, you look at it from two components, largely structural transformation, productivity transformation. That takes a while. But at least the strategy government put in place from the beginning of this year, we all agree, especially from the fiscal side, and which has more or less like calmed the heat. That gives us a certain platform to build on. We've seen inflation decelerating sharply from 23.8% to 11.5%. That end of August. That's good news. In fact, if you look at the rate of deceleration of inflation in 2025, and you compare that to what happened in 2017, you can see there's some signs behind this, supported also by the aggressive strengthening of the currency and all of that. So, if you put all these things together, the expectation will be that the CD will stabilize. I think the CD jumped the gun in terms of the pace of the appreciation within just 3 months and all of that. When it happens that way, and you cannot situate that within broader structural transformation, economic transformation in the real sector of the economy, the expectation, in fact, and that is how speculative activity scales up significantly. And you will see that. We also saw that Bank of Ghana stepped in strongly. And in fact, on this show, we had indicated that Bank of Ghana was actively in the market.
Yeah.
Even though they denied that only for IMF to come and shine the light, we knew that there was some kind of intervention. We do not disagree with the central bank that they have the power and the locals to intervene. But at some point, you could visibly see the footprint of the central bank in the market. That causes distortions. When distortions occur in the short term, we expect that the market will correct itself. Because one basic function, and I said it on your show, that one basic function of the market is price discovery, where the forces of demand and supply interact with some level of intervention. And that is why all over the world, you don't really see any country practicing pure flexible exchange rate regime. It doesn't happen anywhere in the world. Some level of intervention from the central bank or the authorities is meaningful. It's to be expected under managed flexible exchange rate regime that we are operating. Okay. But its excessiveness, okay, and also the timing, they took advantage. Okay, I want to believe that the central bank meant well. Okay, but given that there was subdued demand in the first quarter to the beginning of the second quarter, and also the expenditure restriction, government wasn't making payments. I think that there was a bit of a gap from the demand side, and therefore with some level of injection, the Cedi uptake became much stronger. So with that, we expect some level of correction. Okay. I think going forward, I'm quite positive about the outlook. Bear in mind also, let me gossip small this morning. Don't quote this. Nobody quotes gossip. Our headmasters are coming to town. The IMF is coming to town end of this month, all the way to first week of October or so. I think that it's important that we also erase our footprint in the market, because the fund had raised an issue about the excessive intervention in the market, right? So as part of the reforms and all of that, I think this is also to be expected going forward. If you look at investor sentiments, offshore investors who are preparing to participate in the bond market as government prepares to issue bonds, once we're able to scale the fifth review, we are going to get in excess of $360 million. That may not be enough, but scaling the fifth review consolidates the confidence that the economy is broadening and all of that. And I believe that as government prepares the 2026 budget, a lot will be expected from that budget, and I believe that government will deliver. So I think we need to be calm. I would just say that I know the central bank, maybe for pride for their record, they wouldn't want to take their legs off the accelerator, because if the Cedi depreciates, it looks like it's an indictment on us or something. But let's look beyond that, and then let's focus on the fundamentals. We should be, it's just like saying that we'll concede some goals, we also score some goals, right, going forward. That should be our approach, so that we don't drive the Cedi's rate through regulation and directives, which ultimately become more punitive, because the behavioral reaction, we may not be able to control. Look, Winston, since the domestic debt exchange, if you check the movement flows, a good number of Ghanaians in the upper middle income and the rest of them have externalized their holdings, their wealth, their reserves outside this country, because they just don't have confidence, trust, protection within the system and what will happen. So, and if you drive the rate more, or try to sustain it more through directive regulations, they may interpret that to be more punitive, right? And I heard one economist saying that the reform should not be that punitive. I agree with that, right? So we need to look at it broadly and say that over a long period of time, once our footprint begins to show in the real sector of the economy, agriculture, industry, service, the market itself, players will begin to align their expectations, because beyond how the governor of Bank of Ghana sees things, we are also looking at things from our different angles and perspectives and all of that. So all of these things are playing out, but I think that we are not in worst case scenario. We have exited the peak of our crisis. Recovery, you can trace it to the broadening of the economy, where things happening on the ground and all of that, and therefore I think this is not just a fluke. Some level of calmness is important.
Okay. So, Prof, this calmness that you talk about, I mean, there are many persons who are concerned. They say the president has talked about the Cedi's real value 10 to 12. What do you say is the Cedi's real value, and at what point should we be concerned?
Look, it's always very difficult to say the value is 10. In a month's time, it could change. The dynamics, it's not fixed and all of that. I think that when we talk about market correction, I don't know whether it was on this week, we had indicated that towards the end, towards the end of the year, we should be looking at the CD probably close to 13.5. Others have talked about 14 and all of that. It's all about the dynamics. We have our peak period, and then we have our low period as well. In the peak period, when we experience what we call cash flow mismatch in terms of inflows and then outflows. Businesses would import in anticipation of Christmas and all of that. So the demand will pick up. As government itself begins to also recalibrate its fiscal strategy, begin to spend progressively, especially from next year, we expect that there will be some level of pressure on the currency. That is to be expected. I think we are too much focused on the exchange. We should take our mind to the fundamentals of the economy and what we should be doing within the real sector of the economy, so that I get a bit concerned because every now and then, if you look at exchange rate discussions and you do market surveys, it more or less dominates our economic discussions much more than anything else. And I think that is not good enough. That in itself is not good. Right? So we need to de-escalate this discussion so that the CD finds its true level and all of that. But beyond that, we should look at another thing. So if you look at the average exchange rate interbank and you compare that to Forex Bureau, and then of course in the outer layer, black market, the divergence is too wide. So I think it's one area that the Bank of Ghana should be looking at. Okay, what band within which we should have these corridors, interbank, Forex Bureau, and the rest of them, so that we don't see some kind of a movement between the formal financial system, the first day, and then ultimately the black market. We need to look at all of that. It should not just be the exchange rate. If you look at the spread, the bid-ask spread, Ghana's own is one of the highest. I'm not benchmarking ourselves against Nigeria. They are not good neighbors on this call. But if you look at it across well-managed economies, even among our peers, you can see that our spread is very high. That also tells you the market is not efficient. Okay, it's not only the exchange rate. We use the exchange rate, the bid-ask spread, to determine whether the market is efficient, and that is what we study under market microstructure. Ours is one of the highest. Again, it tells you the market is not efficient. That is not the only thing. If you look at the spread between the deposit offer rate and the ultimate lending rate, the spread is one of the highest, even among our regional peers, structural peers. I don't want to say if you compare that to our aspirational peers, but if you compare that to some of our regional peers and structural peers, ours seems to be one of the highest. All of these things doesn't help. So we should be looking at narrowing this gap and all of that. That way, we will be crowding in the FX and credit within the formal financial system rather than the parallel market that we are seeing here. Okay. Of course, we've seen the central banks making a lot of effort and the rest of them, but we know there's a limit to how far regulation can resolve fundamental issues or directives. So we need to know where our limits are so that we don't drive the economy underground.
Prof, thank you very, very much for joining us this morning. Professor Godfred Bokpin is a professor of finance at the University of Ghana Business School.